Is my mic on? Testing. Test. All right. Seems to be working. Stan Weinstein revisited. Combining Stan Weinstein on the weekly candle chart with my classical chart trading framework on the monthly candle chart to make sure I have harmony, and then it's full steam ahead for A+++, super duper ultra cool stock pick. All right, axas, AXAS on the Nasdaq, and that is Abraxas Petroleum Corp. And that's one of the picks that came from the screeners from stageanalysis.net. And as soon as I get new tickers that I haven't been following, I pop him up. I add some alerts at key levels, and after that, it's just a question of waiting for those alerts to get triggered, get my email, get back to the chart, and see how the chart has morphed and what I could do with it. So axas, if we start, let's start on the monthly candle chart, just to make sure that we have the trend with the wind of the higher prevailing trend in our back, in our sails. Make sure we're not going against current, we're going with current. And check it out, man. Looks super nice. Here is the resistance right here. And here is the support. 1, 2, 3, 4, ascending triangle. Or else you have multiple supports. You have smaller patterns that are encompassed within bigger patterns, and henceforth it's like fractals. And these smaller launching patterns closer to the breakout have more probable chances of reaching their possible targets than the bigger encompassing pattern, which has a further away target of reaching its target. And let's do this let's just see that first target where it's going to bring us. Right here. Here's the intermediate target right here. And then you have the not even sure I want to put it. There you go. There's the furthest away of targets. And that's what happens. Why is a further away target less probable? Well, it's further away, and that means that a whole bunch of stuff could happen. You could run into walls. That's what I call previous support turn resistance, or resistance turn support. And let's check it out. So this first target here you had a bottom for a month. Remember these monthly candles, resistance. If it's broken out of, it becomes support, and that target's going to probably hit it there. So doesn't mean it's not going to go through. It's just the area of congestion. That further away target has to go through whatever congestion that first target had, plus whatever it's going to reach on its way. And here it's going to reach a wall and going to reach just a natural resistance right there. So that's good. You're on the good side of the resistance at that level for that intermediate target. So when I do my target considerations, this would be a nice placement for a natural target. And the furthest away target has to go through that wall, that resistance up here, and it's below this other wall here. So this wall is a previous support broken down of, now it's become resistance, and we're below that, so no issues right there. So anyways, all these targets, they're to give you exit points for when you enter a trade. So when you enter at the close of this monthly candle, wherever it may end, on my chart trading framework, I always put my sell stop below the wick of the breakout candle. It's a monthly candle, you're really deep in. It's pretty safe there. If the price action really goes back down below that breakout candle, it's you shouldn't be there anymore. So here's the risk, top to bottom, and these whatever you add on is a reward. So in this case, hold on, let me draw an arrow. Here's the risk. So that first target is so we'd have a 0.5, 1 to 0.5 risk to reward. That second target would have a 1-to-1 risk to reward. And that further away target, it'd be almost a 2-to-1 risk to reward. Reward to risk, 1 to 2. 1 being the risk, 2 being the reward. So anyways, that's just, we're not doing that. That's my classic trading framework. But I just want to know that I'm beyond the trend. So if I have a close here above, above 266, and that means that I have a monthly candle breakout with these implied measure moves right there. Harmony is attained. So how many who have 1 week, 2 weeks left, a week and a half left before the end of the month? If you're patient, it's be the ideal time to wait. All right, let's go back to... So here I have my ADX I use as a screener. And anything under 20 is would be stage 1 or 3. And right now, see the price action. It's already It's already started to trend upwards, and even had started to trend downwards. Well, yeah, it's right. But right now, you see, you have these micro stage 2s, stage 3s, stage 4, stage 1. See how the moving average is not, it's flat, but it's trying to go up and down. But since it's not very aggressive, this is just like a nice formation of a stage 1. So here we had a stage 2 up here, stage 3 the top, nice stage 4 all the way down, stage 1 here, short stage 1, and then went up, stage 2, stage 1, stage 2, top stage 3, small stage 4, stage 1, and now it's starting to go up to stage 2. These are just smaller stages. They didn't last as long. I don't know if you would have entered or not. You're above the Ichimoku cloud right here, so it would have been hard to enter at these levels right here. If you would have probably got whipsawed because the price action went back up. So anyways, these micro waves, these stages, they're creating a bigger encompassing wave. All right, let's get rid of the ADX. Don't need that. Let's remove all these trend lines. And remember, Ichimoku cloud, if you're below the red cloud, downtrend. If you're above the green cloud, uptrend. You could the same thing as a 30-week moving average. If you see it going angling upwards and downwards. So what do we have here? Right now, we're above. See, the longer the stage 1's sideways move continues, the more the Ichimoku cloud becomes thinner and thinner. And over time, green, red, green, it gets thin and just like flips from one to the other. And right now we have no red cloud above us, and this is a support protecting the future. And this, you could imagine, is going to be like this maybe. Let's put some space to imagine. So maybe that green cloud here, maybe it's the start of the of a nice stage 2 going upwards. So what do we have? We have a smaller launching pattern right here. We have okay, so like that. Zoom it up. Right here. We're above the 30-week moving average, above a trend line. There's a further away trend line, but this one, whatever resistance that it's worth, it's not in the Ichimoku cloud anymore. So that resistance is not as effective as we might think it would be for that time frame if you respect the Ichimoku cloud's principles. RSI is very nice. It's not the Mansfield indicator as Stan uses, because I don't have it. My TWS software just they don't want me to have it. They don't want us to do Stan. But I still use the RSI. Its relative strength to itself is still a good indicator. I've noticed that if it goes over the halfway point, just on the Mansfield is very good. If it's going upwards, it's good for the stage 2. So I have that. Look at these two candles here. I often look at the volume and it gives me an indicator of where the actual breakout candle was, the first one. And there's always patterns, encompassing patterns, like I mentioned on the monthly. It's still there on the weekly. And here's the actual breakout candle, I believe, is this one right here. Look, it's okay if you don't get on the first candle. There's other levels where you could get in. And this candle right here is the actual breakout candle. We're looking for twice the average volume of the previous 4 to 5 weeks, and we pretty much have it here. All these levels under 5,000, under 5 million, a little bit above 5 million, 2.5, under 5, and here we're almost close to 10. And this is this week continuation candle. I don't know what the volume is going to end up. There's 2 more days, and maybe it's going to go even higher here. And it's continuing. It's breaking above more resistance, or more potential resistance. And that looks like a solid stage 2 that's been ignited for axas. What else do we need to look at? Okay, the bottom of the formation. You have a couple of choices. Could be here. I have difficulty. Okay, there you go. Okay. For your sell stop, investors and traders, you could probably want to put it here under that support line, under the 30-week moving average. Traders, Stan says 46% under the breakout line, under round number for that extra protection. You could do it, but I always prefer under the 30-week moving average as a minimum case scenario, because now we didn't get that first breakout candle, and this one later on, if you start putting your sell stop above the 30-week moving average, you're just begging for on the first pullback. Is a first pullback. Okay. For the first 1 to 3 months, usually there's going to be a pullback. If it's accompanied by low volume or contracting volume, okay. It's just that the pullback will come back to this initial line here, or will the pullback just come back to this secondary breakout candle right there. And if you put it too close, you might land on an emotional landmine. You might start panicking. You might forget to check the volume, or even if it's contracting volume, you can say, I want to get out. So put your sell stop under a 30-week moving average, under a round number, under the support line, and you'll be okay. You got to accept there's always going to be a pullback, or anticipate that 90% of the time there will be a pullback on breakout stage 2s. Stage 4 is less often pullbacks, but on stage 2 is almost always so. If we're going in, don't expect it to go up. Anticipate the pullback observe the low volume, contracting volume on those red candles. And if you see that, just get ready to buy some more when it hits close to your resistance, the resistance line, the breakout line, which is now support. And you'll be able to add on your position in a safe manner. And after that, you'll continue that stage 2 going up. So we're good. Good. So this chart, I'm going to keep it open. I'm going to wait for the monthly candle close. And just to make sure that, because you see here the wick at 3, there might be some, that's probably going to be the final resistance on the way. And after that, it's the bottom here, this previous support and resistance. So I just want to make sure my candle stays, we have a close above this 250 level and above, ideally above the 266 level, I think. Is that what I said before? Yeah, about. And after that, it's time to hop on board that night stage 2. Enter when the move, Stan always says like 40-50% move of the stock already happened from the previous low before you get in. And that's what you're looking for. Let me see what I have here. Yeah. No, that's a very nice stage 2, guys. All right. Keep an eye on it. And wait for that end of month if you can. Just make sure it doesn't, the price action doesn't revert back and goes back into no man's land where you're stuck. Or else, if you just base it on the weekly, then you already have your breakout candle. Or wait for this current one to close. And then you're good to go. And if you really, really want to wait, then if you believe this has moved on too much now that you know what, it's ruining your risk to reward that you're expecting, then you could always wait for the pullback to come back. It always happens, or happens, I don't know, 80-90% of the time within 1 to 3 months. And if there's low volume, it's a safe bet to enter right there. So it's all win-win situations. Get on in now and hope the pullback's not on high volume and you get to add some more. Or just don't do anything now and wait till it pulls back. So those are your options. That's what Stan provisions for in his book. There's a nice chapter on when to buy, when to add on. And I hope this helps, guys. All right, Axas. See you at the end of the month. Ciao.